So guys, I'm sure that on many different occasions, you probably sat there and thought to yourself, what kind of real estate crash are we going to have in the United States? Where's it going to end? How far is it going to go? And that's a good thing to think about, because let me tell you, there are so many people out there who are standing strong on their position that the housing market is totally fine. I don't get it. Now, my problem is that these people are just counting on the fact that you're not going to dig through the data and you're not going to seek the answers for yourself that you actually need, because by looking through the data, it suggests exactly where the real estate market is going to go in the United States. And here's everything very crystal clear if you just open your eyes and look at this data. Now, we all know that because of the COVID-19 pandemic, what happened to the housing market across the United States? They blew up in so many different ways and had loads of effects on prices across the country. All right, guys, my name's Rock Daniels. I am the Bluegrass Realtor for all your real estate needs in Central Kentucky. Please take a second, hit that subscribe button so you and I can stay connected. All right, let's get back to it. According to the St. Louis Federal Reserve, all right, the average sale price for homes was $375,000 in 2020. By the end of 2022, it had risen 46% to $550,000. Now, people, you got to take this in mind that this was over the course of 2 years and was absolutely the largest increase in property values in American history. We also saw this with the Case-Shiller Index, which is the U.S. National Home Price Index, which showed rising index scores from 210 to 310 over the same time and had a rise of 48%. But since then, all the data that I have seen shows that housing prices have been falling steadily every month for 5 consecutive months, which could be over 2%. Now, the Case-Shiller Index now shows that prices have fallen by 4.5%. Now, this is worrying to me and something to cause alarm. But this wasn't the crash that many people have said that we should be worried about, because, prices were down 5% over half a year, and it's hardly the 2006 global crisis is what people are saying. But actually, there seems to be an analysis out there if you look further. Now, Forbes is saying in an outlandish quote, totally outlandish, that if you're hoping for a major downturn to snag a cheaper home, then you might want to think again. What's more likely is a gradual slowdown in the pace of price appreciation, where home prices continue growing, just not as fast as they are now. I think they're crazy. So my question to you is, where does this complete disconnect from the housing market collapse come from? We all know that it is coming, that we're in the middle of it. Now, how can we predict these events? Now, one thing's for sure, if you live outside of a city in a less densely populated area, perhaps, let's say you're living up in North Dakota or South Dakota or Montana or Wyoming, there is a serious chance that you haven't noticed any housing prices fall at all over recent months, because really, housing prices like in Montana have fallen only about 0.2% so far this year, which is hardly noticeable at all. And this is the same kind of trend that we're seeing all across the United States in all these little rural communities all across America. And it's simply because they are less popular areas, but surprisingly, there's a large amount of Americans that live in these communities. Contrary to popular belief, millions and millions of people live in these communities. And they never saw the mass appreciation that we saw in other more populous places across the United States. So they will never reach those insanely bubbly prices. And that's why they're not suffering the blowback from the crash. And that has already started right now. Now, that's the real secret to this whole crash. It's actually that the crash is in full swing, but these rural communities are so far not in a decline, and they're helping artificially hold up or inflate some of these prices and making the U.S. home prices nationally look better. Now, I challenge you to look at any city across the United States, and you will see exactly what I see, and that is that they have decreased over recent months, and much more than the 0.2% or 1%. And the only reason I know this is true is because I've literally spent hours looking now and looking at all the data. All right. Now you look over at New York. Now, prices peaked at an average of 835,000, have now fallen to 785,000, which is 6% loss. Now, Los Angeles has seen an average price go down from 1.05 million to 920,000. That's a 12% adjustment. Las Vegas, 435,000 to 385,000, 11% adjustment. Boise, Idaho, falling from 585,000 to 480,000. That's an 18% drop. And you're seeing smaller, less populated communities crashing and falling drastically. Almost every city out there that I'm looking at, we're looking at 10% drops in spaces that have not even been a full year. And the government is trying to say that property values are holding strong. We need to pay attention to the data, because this community, the community of financiers and the community of people in charge of selling homes, is designed to hide the reality from all of us and make it incredibly difficult to invest in proper things and make money. There is a major problem if you're thinking that the housing market is not going to crash, because we have actually distorted our thoughts and our memory of what a housing market crash really looks like. You know, we sit there and we think that we're going to have these 50 and 60% declines over the course of 30, 60, or 90 days. Is that really what we have in a housing market crash? We forget that the last time the housing market crashed, it started in 2006, and it did not end until 2012, and that was 6 years later. All right, 6 years. Now, housing prices fell by 50 points on the Case-Shiller Index. It fell from 184 to 134 during that 6-year period, and that was a decrease of 27%. But during the first year of that crash, the peak that we saw in July of 2006 to July of 2007, prices only fell by 1.7%. And this is what we need to look at, people. This is what we need to remember. We are sitting here today with the exact same measurement of housing prices. We can look at what the St. Louis Federal Reserve said and the American government, who are sitting there telling us that prices have fallen year over year. And if we look at the last 6 months alone, we have seen 4.5% reductions in the same indexes. And remember, the federal government is not above lying to you, and they frequently do this, all right? Whatever suits them and their narrative. You know, the current administration, and I'm not getting into political things, I'm not saying Democrat, Republican, or whatnot, because this is all the same, it's all the same government, but I'm saying that they try to change the definition lately of what recession means so that they could claim that America wasn't even in a recession right now. And so how bad do we want to let this get before we open our eyes and realize what is going on in America today? Now, the average home price, you know, in May of 2022 at $433,000, and today, just 9 months later, the average home price of $383,000 with a decline of 11.6% over 9 months. Wake up. The crash is so far accelerating faster and quicker than anyone on the global market has said to you or is telling you. So please open your eyes and actually have a look at the data, and the truth is glaringly obvious. It's going to continue to fall at a very dangerous rate. Are you going to trust your financial freedom and everything that you've worked your whole life for to people who are out there saying that the real estate market is unbelievable? You know, because that's exactly what they teach these salespeople to do. They teach them to say in real estate, the real estate market is unbelievable. You know, in the back of their minds, they say that it's unbelievably good or it's unbelievably bad. And it's just the way they spin the narrative to keep you listening to them. Stop listening to people who are spinning the narrative on your financial freedom, on your retirements, on your investments. I'm urging all investors who own rental property that if you're thinking about getting out of the business anytime within the next 5 years, right now is the time to put your property on the market. Right now. Put it on the market for sale. Do not hesitate. Do not wait. Do not allow other people to put their houses on the market, which is going to further crush this real estate market. Put your houses on the market. Now is a strong indicator to sell, in my opinion. Now, there's people out there who are going to say that there's going to be a light at the end of the tunnel. But actually, when we see there's a bubble, there is a huge bubble. And on this scale, we're depicting it as the main stages of this bubble. And right now, we're saying that a return to normal in the housing market is not inevitable anytime soon. You know, a bull market had started over the past 6 weeks because inflation was coming in harder than they thought, and it would continue because of this rate hikes that we've seen by the Federal Reserve. They happened, and the recession is all but guaranteed. In 2008, the housing market bubble collapsed underneath us, and we weren't prepared. It's not like the rest of the world is going to be safe from this crash, because countries like Canada, they're probably going to see the bubbles burst on them as well. You know, I've told them, look at the data showing that there's going to be a housing market crash at a rate we haven't seen in years, and housing affordability has never been lower at the time when people are getting drastically poorer and the cost of goods and services are going up. Just ask any of your mortgage bankers. Ask them, because mortgage applications have literally fallen over the cliff. They don't have mortgage applications hardly anymore. 90% of people in America have locked in mortgage rates that are lower than current mortgage rates. People aren't refinancing. They're not out there. Most people would have you see a 35% reduction in the price of a home to encourage them to sell their home today. They would have to see that 35% reduction because of the difference in mortgages. All right? You don't see people out there trying to buy something new. This entire mortgage bubble was fueled by one thing and one thing only, and that is cheap debt. You know, this cheap debt is gone, and it's not coming back. Low interest rates, 3%. Some of you people that got in the range of 2% somewhere, they are not coming back. And what you're going to see is that this is the last housing crash like we had last time, but we had subprime loans. You know, subprime loans were given to people with poor credit scores and adjustable rate mortgages. Now in this crash, we're going to see overextended people with good credit scores. But the ones that we're going to see that get hit today are going to be the investors who invested in adjustable rate mortgages that are commercial loans on investment properties. And when those mortgages adjust, let's say, for instance, these investors have invested in areas of the country like where I live in Lexington, Kentucky, that have municipalities that are fighting against them and trying to create things like a tenant's bill of rights, or they're trying to maybe think about rent control. They're trying to close down the amount of money you can make. And you're going to see investors lose money, hand over fist. And in the end, they're going to be the ones who are going out of business, and they're going to have their properties sold short, or they're going to have them foreclosed on. So in conclusion, I want to say my outlook of the real estate market's real, and it's very bleak, but it's the truth. My name's Rock Daniels. I'm the Bluegrass Realtor for all your Central Kentucky real estate needs. Please give me a call, because I want to be the guy to help you get out of all of this mess and into the financial freedom that you so deserve. Thank you so much for stopping by today. Hit that subscribe button so you and I can stay connected. I look forward to seeing you again on a future video. Be sure, connect with your own financial advisor and get advice from them as well.